You do it. It's Barron's cover story this week. Barron's deputy editor Alex Ewell joins the panel. So Alex, Twitter, hugely influential, enormous platform, but it only makes half the revenue per user of Facebook. Nobody's really figured out how to monetize this thing. Can Elon Musk fix it?
Well, I think the best news for Elon Musk is that Twitter has needed to be fixed for years, right? It's not a high bar we're talking about here. And when you look at the service, it hasn't even changed for a decade, basically. So yeah, I think there are a lot of opportunities for Musk to fix the platform. And since Twitter is private, we won't even know financially for a long time what happens. He's got a long leash here. He also has a lot of cash to work with. He'll probably cut the company's R&D and marketing budgets. That could give him like $2 billion a year to play with. He might also trim the workforce. One thing we know he doesn't need is a PR shop. So he's basically a one-man publicity machine.
He talks a lot about free speech, but it takes more than that, right?
Yeah, I mean, in Elon Musk style, we really haven't gotten a 10-point plan. I think free speech has become a really good talking point for Musk, but it's also a bit puzzling. I mean, he says free speech is that which matches the law, but we know that free speech doesn't even really apply to private companies, and I'm pretty sure Musk knows that too. So in Barron's this weekend, we laid out real ways Musk could actually fix the platform. It starts with getting rid of these spam bots that are really driving the worst parts of Twitter's viral and partisan content, and then doing more with subscriptions. I mean, subscriptions really could be the perfect corrective for Twitter because they would make that spam uneconomical. They'd filter out a lot of the noise. And then it could be a new revenue stream that finally helps Twitter match its profits to its influence.
Yeah, I think that would be a great move, and I haven't heard anybody say, hey, it's too civil on Twitter. Let's lower the level of discourse. But Al, let's pivot to Tesla. So two threats here. One, Musk has already sold $8.5 billion worth of stock to pay for this. Could a margin call come if, say, people think Twitter's in trouble? And also, remember, from the very beginning, one of Twitter's problem was it had a part-time CEO. Jack Dorsey was also running Square. Now it has another part-time CEO or owner.
Yeah, I mean, those are the two issues. Let's deal with distraction first. We talked to a handful of analysts and investors. None of them are worried about Musk being distracted. They believe in him and believe he can multitask. That might be an optimistic view, but that is the reality. Now, for Tesla stock...
Don't you think, though, a lot of those analysts are worried to say anything negative about Musk?
That's a good point. We talked to bulls and bears, right? We talked to one guy with a $250 price target, one guy with a $350-ish price target. They basically said, no, this isn't an issue either. So they're not unafraid to take shots at the stock. But you raise a good point, Alex. I mean, he is the most important and powerful person in the auto industry. So that would not be good for your career to be taking shots at him. With respect to margin calls and some sort of death spiral because Musk is forced to sell, I really think people should just remember a couple of things. One, he has the money to buy it outright if he wants. Now, he's using complicated financing because he can. And really, the risk to a Tesla shareholder is just that disruption from Musk selling, which should be temporary.
And Alex, I have a question for you. For making this deal make financial sense, Musk had earlier said that he doesn't care about the financials, but obviously there's going to be debt to do so, so he must. So can you walk us through how he could make this deal make financial sense?
Yeah, I mean, Carlin, that's what's been so crazy about this whole thing, and I think why we're talking about it even more than the usual Musk deal, which is that he said he doesn't care. I mean, that's not something you usually say in the M&A world. The reality is he does care, and he's going to have to care. I mean, Twitter is now going to be a heavily indebted company. They'll probably have something like $600 million worth of debt payments to make every year. So, Carl, I think the bottom line is that Musk is going to have no choice but to run this as a serious business.
But remember, there's still questions about whether this deal is even going to close. Twitter stock continues to trade at a really big discount to Musk's bid. And talking to arbitrageurs, the guys who try to bet on these things, show that there's probably a 50% chance that a deal doesn't happen at all.
Thanks, guys. Thanks for coming on, Alex, to talk about this.